next transaction that we need to look at are the purchases, the money we got from the VE company. So we click on Post. We find, first of all, cash. And the amount of money for our cost of goods sold that was sent to us from VE was $48,913.54. So we want to credit cash 913, or if $48,913.54. Calculate and post. Another one, yes. And the next one goes to purchases. That's where we put items that we want to add into the inventory. You never post directly into the merchandise inventory. So we go to purchases, and we want to debit at that very same amount of $48,913.54. Click our calculate post button. Another posting, yes. Actually, let's do the trial balance and see if we're in balance. And yes, we are. So our posting, it still kept everything in balance. Now let's see. The next step we want to go to is we have some more postings to do. We're going to post cash. And this time we're going to debit cash. And the amount that we want to put in, this is the amount of money that we're projecting that our open house is going to generate. This would be something that would be done in November. So we add that to our cash. And then we also want to call that part of our sales. We come down to sales. And there it is. Open house and trade fair sales. Click there. And the same amount of money goes there. $133,000. And that's just kind of a guesstimate. And so that we can make a little bit of profit in our projections. Let's take a look at the trial balance. Everything still looks okay, so we don't have to back any entries out or do any more posting to correct anything. Now let's see, we have some more postings to do. We have some additional transactions that need to be posted. Let's go to cash again. And we're going to credit cash. For $100,000. This additional transaction is to record the additional merchandise we need to purchase for the open house. You have to have your inventory. We're just kind of playing with these inventory numbers. Later on, if you look at the step-by-steps second semester, you can see learn a little bit more about how inventory is really handled, because we're just kind of using total amounts instead of actual items. And you can see we're still in balance here. Now we have to calculate the ending inventory. That's an important part of doing an income statement. So here's the steps. We add the beginning inventory and the purchases together. That's $100,000 plus the $48,000 plus another $100,000 for $248,000. Now we have to add the sales from the VE contract, $132,000. Sales at the open house, so we have $155,000. To calculate the cost of goods sold, we multiply it times that number percentage we found at BizStats, and we end up with $155,696.77. Subtract that cost of goods sold from the goods available for sale, and you can see our ending inventory comes to $93,216.77. It's better to have kind of a little bit larger inventory so that you know things are covered when all different things come up. Now we're going to produce our financial statements. So we see that we're still in balance. We want to click on the tab for Income Merchandise, display the income statement, and here's where the ending inventory needs to be added. We put this in once before to calculate the beginning balance sheet. So here's the number that we calculated for our ending inventory. This method is called the gross profit method. There's other ways of doing it, but this is one of the easier ones. So you can see we made a net profit of $4,334.90. So that's pretty good if that was our first month. So that's kind of our projection. We can revise that if our sales were either more or less. Of course, you can print these statements out. Back in the trial balance section, we showed you how to print out those statements. Click on the Stockholders' Equity tab, and you can see that the net profit gets added into our stockholders' equity. So that increases our stockholders' equity by the amount of the net profit. Had we had a net loss, it would have subtracted that number. Next thing we want to do is we want to click on the balance sheet to see how this comes out. So we display it first, and it shows us all of the assets, liabilities, and capital. The little box pops up to check to see if you're in balance. It says total the assets must equal the total liabilities plus capital stock plus retained earnings. So what we want to do is we take the total assets, subtract the contra assets to get the net assets. That should equal the total liabilities, the capital, plus the retained earnings. Click OK, and then it says, the next box comes up and says, if you're in balance, save a printable copy of the balance sheet and then close the books. So we can click OK, and what we want to do is we want to print out our balance sheet. So click that closed, and then save this, and let's give it a name and decide first of all where you want to put it. I think I put mine on the desktop. So whatever folder you want, you find your own folder, your student folder, and go there. Again, I did the desktop, and then you want to give it a name, something like printable balance sheet December, so you know what it is. You know, it's your company, so it would be in your company folder or whatever you've called. So there's your file name. You want to make sure you use the word printable because that separates it from the regular actual number files. And then we want to see that. We're going to print that out. We're going to use Notepad to do that. And so to run Notepad directly from here, we hit the Windows key plus the letter R for run. So there it goes, and it says Notepad, and we say OK. Now we want to retrieve this printable file. So we go up here, and we say File, and we say Open, and we're looking for that printable file, whatever we called it. And I got too many things here. It's kind of hard to see where it is, but it should say printable balance sheet. There it is right there. Printable balance sheet. Click on that, and it opens it up, and you can see that we are in balance. Our total assets do equal our total liabilities and capital. And then we want to go ahead and print it. Then you select what printer that you have, and you say print, and it gives you a printed copy. Next thing we want to do is we want to close the books, and so we give it a file name, something like November closed. That way you know that it's a closed file. That means that all the revenue and the expense accounts are zeroed out and the balance is transferred into retained earnings. So that now let's go ahead and take a peek at what that folder that file might look at. So what we want to do next is to open Notepad again with the Windows and the R, and we'll come over here and we'll say File, and we're going to say Open, and we want to look at this closed file. So we find the file that we had, which was November. I believe it was November closed. Yes, there it is. Double click or click and then Open, and then it'll show you what the file looks like. This is what the file looks like that the program actually reads. Now what we want to do is we're going to do a save as, because we want to have this file ready to use for next month. So the file that we retrieve next month when we start doing our books is not going to be the closed file. We're going to call it, how about December, since November was the month that preceded it, and so on. So we're going to call, I'm looking for it here on the page, and I thought I had one, but apparently I don't. So just want to call it December, and then you want to save it. And you can see I'm still trying to find it. I thought I had it on the desktop, but I don't seem to see it. But that's what you want to do. Each month you're going to close the file, and then you're going to save a copy of it as the next month. And then when you start December, when you open up your general ledger, then it's going to be December that is the file that you want to open.